In today's episode of Crypto Over Coffee, we're talking about the harsh realities for crypto in the wake of the Terra LUNA and UST implosion this past week. We've also got our 404 Logic Not Found segment, and I'm recovering from COVID, so this may be a shorter episode. Make sure you stick around for the whole thing if you can. Now, if you like crypto, please subscribe to the channel and hit the bell notification button, or you can also follow the podcast version of the show on your platform of choice, and you get a heads up whenever I post new episodes every single weekend. And by the way, make sure you watch out for scammers on social media. They're always impersonating me, especially in the YouTube comments trying to steal from you. So please be careful. And the coffee of the day is from Red Rooster Coffee. Now, while I've been laying around recovering from COVID, the crypto markets have been in complete turmoil. And the reason's pretty simple. A major stablecoin depegging event. And yes, I am referring to what everyone probably already knows. The Terra LUNA and UST stablecoin dynamic duo imploded in epic fashion due to a confluence of factors that caused first a small crack in the foundation of UST's stablecoin peg to $1, and then a massive chasm that led to the complete dissolution of Luna's price and cast doubt on the future of Terra in general. Of course, this event had wide-reaching implications, including a huge market dump of Bitcoin, both from people panicking, and from literal selling pressure as the Luna Foundation Guard purportedly liquidated its billions worth of Bitcoin to attempt to prop up the UST stablecoin and attempt to maintain its peg during all of this chaos. All in all, it was just that. It was chaos, and it only gives more credence to the reasons why I and many others in this space say repeatedly that no matter how great a project seems or how well it's doing price-wise, it can literally go to zero, like we saw here. The importance of taking profits and knowing the risks. Now, I want to talk about the harsh reality of this all for the crypto markets, but first I want to share with you the answer to a question that you might already have. How did this happen? Well, there's always a risk of depegging when it comes to algorithmic stablecoins or stablecoins that are not literally collateralized or backed by anything. The UST stablecoin maintained its peg algorithmically using a supply and demand dynamic of minting or burning the Luna cryptocurrency. To mint UST, one must burn $1 worth of Luna, and subsequently one can burn UST to get $1 in Luna in return. And this minting and burning is what drives the supply of Luna, by the way. In this past week, pressure was placed on UST's peg as increasing volumes of UST were exchanged for Luna in a large exodus from the stablecoin UST. Now, as people sought to exit, more and more Luna was being minted to cover the burn of that UST. And as this happened, the price of Luna began to see pressure. There's more supply. As Luna cratered, it took more and more Luna to cover the exchange for UST as people exited. You also had savvy investors looking to DeFi platforms like Curve to swap their UST for other stablecoins in arbitrage environments, creating this environment where these DeFi protocols are seeing massive lopsided supply of UST dumping on the market, which causes these protocols to start offering UST at a further discount to make up for the imbalance between the pools for UST and the other stablecoin pairs. Again, that's more pressure on the peg. As exchanges halted withdrawals of Luna to kind of stem the bleeding, of course, panic sets in when this stuff happens, and that panic drove more Luna and UST exodus all the way to the point where the peg was so far gone that there was literally no saving it. It was a death spiral, and eventually there was not enough market cap in Luna to cover the UST debt. So it was a disaster. And I'll admit it, I didn't anticipate an implosion of this magnitude. I had some degree of optimism that Terra had found a path to provide a reasonable yield on Anchor to keep people involved without blowing the treasury. They were getting UST active in more DeFi ecosystems, and that there was a plan for minor depegging with the Luna Foundation Guard. I was completely wrong on that. The first harsh reality here is that algorithmic stablecoins, particularly ones that use endogenous collateral, have been proven again to be a disaster waiting to happen. And I was mistaken in my optimism that it could be made to work here. And that's not a mistake I make twice. I tend to not make the same mistake twice. The second harsh reality is that this will only embolden regulators and lawmakers around the world in their repeated calls for heavy and strict regulations in this sector, because the very thing they've shouted about has happened. A stablecoin has imploded and caused serious financial strife for a lot of people. It'll be no surprise if we see reactionary actions taken by regulators here, and I don't really blame them, to be honest. This was a catastrophic screw up that saw billions go up in smoke. And the third harsh reality is more subjective, I admit, but it's my personal opinion. Terra is no more. I would not touch the restarted Terra network with a 100-foot pole. And the first reason is that simply forking and restarting the chain from a pre-implosion snapshot will not fix the underlying issues that caused this problem in the first place. The second reason is that there's a lot of broken trust here. And as of yet, no reason for anyone to put more money on the line without transparency, accountability, and a clear plan for moving forward from Terra's camp. And I don't see one yet. The genesis of this issue was that UST peg was largely held in place by the anchor protocol yield. And when that started to go, UST holders started to go. And there's not a fix for that here. That was unsustainable. And this is one thing that will develop over time. And I'm open-minded if some amazing plan is hatched. But if there's any hope of a comeback, Terra needs to do what Thorchain did after its exploits. Take ownership, take accountability, take time, really fix things and do it right, and come back only when things are right. And do so with complete transparency, because people are owed that. There was not enough transparency before. Things look bleak right now. I know that. And if you were affected by this chaos, as I know that many have been, I can empathize. If you need someone to talk to, I'm here, and I try my best to answer messages and DMs. And I can speak from experience when I say that this too shall pass. There's very little in life that you face that you can't recover from. And it may not seem like it in the moment, but it really is true. And there are silver linings in all this, despite the harshness of the test. First and foremost, this was a too big to fail moment for crypto. At a scale we have never seen before, a top 10 project disintegrated in mere days, while the rest of the market sustained a lot of pain. It did, but it survived. And this type of event 3 years ago very well could have brought the market completely to its knees, to existential questions. We aren't out of the woods yet on this, but Bitcoin is near 30K again, Ether is right at 2,000, and there's been strength here that I didn't anticipate given this worst case scenario. I expected this to be worse after everything started to unravel. And secondly, this is a lesson best learned early, and I hope this lesson is one people take to heart, one that defines the next phase of crypto adoption. There are risks here, always, and stablecoins need to be held to a different standard of confidence, transparency, and accountability, because they are so crucial to the stability of this market. So let this lesson be learned. I wish it had never come to bear and never had happened like this, but it did, and we move forward together, and we learn this lesson together. Now, I also want to quickly thank Masterworks, the sponsor of today's episode. Masterworks provides its members access to fine art as an alternative investment, which is very important during times like this in the broader equities markets and the traditional markets. There's a lot of uncertainty. Based on research and art trends and projections on appreciation of value, Masterworks purchases contemporary art and makes it investable to Masterworks members only. The art is then held over time until Masterworks determines the best time to sell, and once sold, the returns from that piece are distributed to the investors. So if you want to skip the waitlist and join Masterworks to check it out, make sure to sign up using the link in the description of this video or podcast, where you can also find important disclosures related to the service, and you should, of course, always know the risks of investing in any form of asset. Now, we're going to skip straight to the brass tacks, folks, of the show because I'm running out of steam already, but I really wanted to get a video out today. So let's go ahead and do some 404 logic not found. How about that, eh? All right, so today's lack of logic is a general call to all the cryptocurrency critics that have and will continue to come out of the woodwork decrying cryptocurrency, deriding crypto investors, and claiming that the jig is up on this fad that is cryptocurrency while the markets are in this pretty pickle. Heck, we even saw a certain MSNBC host rubbing the crypto market pain in investors' faces, which to me is pretty questionable to kick people while they're down, but I guess being an investment banker turned television host doesn't make you a big crypto fan or an empath, apparently. The fact of the matter here is that in over a decade, the over a decade that I've been in this crypto space, there have been countless times I've seen people with big followings or some sort of pedigree calling crypto dead or saying it's only for criminals and idiots or rubbing people's noses in a crypto market rout. And they've been proven wrong time and time and time again. And it may take a while, but the markets recover. We build, we work, and it's almost as if the loudest critics just forget about all the talking they've done when prices are back to hitting all-time highs and a new wave of adoption comes. This will likely happen again. And of course, there's no promise or guarantee, but if history is any indication, I feel fairly confident that we will recover from this. What bothers me most about this, though, is not that people criticize crypto, because heck, a lot of the criticism is warranted. This Terra situation was a disaster. Lots of people predicted it, and lots of people didn't listen. Lots of people lost their shirts. This was a whole mess. But I'll tell you, it's a really bad look to see people almost cheering about the sell-off in the markets and the chaos in crypto. It's even worse to see people basically talking down at people who got hurt in all of this directly. Everyone bears their own responsibility for investment choices, but that doesn't change the fact that these are real people that are affected by this. So a little bit of empathy goes a long way. A little bit of support goes a long way. There's no victory in kicking people while they're down. The crypto space is not one that just capitulates and quits, at least not the core of the community. We'll ignore the noise, we'll build, and we will be back. Among the most illogical of all 404 logic not found examples is counting out the crypto space and betting on its failure, second only to treating other people's financial strife as an opportunity for a rhetorical victory or an ideological statement against crypto or anything else for that matter. Now, I know this show was a shorter one than we usually have, but I do need some more time to recover from the kind of brain fog, headache, congestion, etc. But I will be back to it next weekend as normal. I'm looking forward to it. Thank you as always for watching. I hope you and your family have a great rest of the weekend and week ahead. And until next time, cheers. Be safe.